So today is 2/23/2023. I am doing this midweek update for my subscribers. So let's go ahead and see some of the trades that I have in my portfolio. And this is the ones that I have been doing for my Trade Alert subscribers. So if I have, the way I'm looking at it over here, I don't have any zero DTs anymore. It was pretty, after I did all the journal trades and everything, you look at it, it's hit or miss. This year, the zero DTs have not been working, so I'm not doing them anymore. In terms of diagonals, I've had quite a few profitable trades. These are the four trades that are open. I have XLI put calendar. I have JPM put diagonal. I have Amgen call diagonal and Caterpillar put diagonal. Okay, so those are the ones that are open. In terms of credit spreads, I have this SWAV. It gapped up on earnings and then it started selling off. So I don't think it. I think it gets back up. So that's the reason I have done this. Then again, same thing with TWLO. It gapped up on earnings and then it has just faded. So it filled the gap and I'm hoping that it goes up. So for me, it is 63.60 put spread. That's what I've done. I don't know why there is a dot. It's actually a dash. And then, so for me, these TWLO, if we are anywhere getting close to 63 today, I'll just take whatever 20 bucks loss that I have. I'll just get that out. Debit spreads, I have this one. This is more of an earnings trade, and mostly because Restoration Hardware and the consumer is good still, even though Home Depot gap down on earnings. This is what it has just not run up. That's the reason I have that. Then I have this Amazon. Yesterday I saw a flow for March 110, 118. It's at 96 or something, and this is so far out in the money, out of the money. But I saw a big flow coming in. So I mean, this is more of a lotto trade for me. So that's what I have done. Now let's look at these. Okay, these are the three trades that I have. DQ is a solar play, so I have Chinese solar plays. So I'm sold the 45 put. So if I look at it, we are above 45 right now. So it was actually at, when the stock price was 43, I sold a in the money put. So that's what I got. It's already profitable. So, but I'm waiting for it to get to place where I can take more credit off. Shop, it gapped up on earnings, fill the gap, right? And it is above, as long as we are above 41, even 40 is fine. I have time, April. I think we go back up here. So that's the reason. I don't think, how much did I get, right? I got $2.16 credit for it. So if I just put my pen and calculate, I'm just waiting for the pen, right? So I have to take another color. Okay, so I sold the 40 put and I got almost $2. I got $2.16 credit, which means my cost basis is going to be less than $38. It's $37.84, right? So until and unless it breaches this, I'm fine. And even during the time when we were, let's look at the chart, okay? Let's look at the chart. Last time in October, I didn't want to do this. Okay, let's look at the chart. Okay, so if I look at the chart of Shopify, okay, so let's look at the chart of Shopify and go to the weekly chart because I'm trying to look, right? Okay, so this is in October, right? That was the low. Now I'm just looking at, this was the December low. December low was at around 31, 33, right? Do we get there when it gapped up on earnings? I don't think so. That's the reason I'm like, okay, I'm giving myself some more time. I have time. It's still April. So what I'm going to do, if something happens, I'm going to adjust this trade, but I'm not going to get out of this trade, right? So it gapped up on earning. It gapped up on earning. The next day it fell apart. And it has been 1, 2, 3, 4, 5 days, and it filled this gap, correct? It filled this gap. So I'm like, okay, if it goes below this, this is the 39.20 something, right? Let's think about it. If this also, this comes like this, and this comes like this, and this is coming here, I don't see, that's the reason. See, 37.70 is the breaking point, right? I don't think it goes below this. That's the reason I'm going to hold on to this trade. That's the only reason I'm holding on to this. Okay, same thing with TWLO, right? Now, I think I need to get out of I don't know why this takes so long to, okay. Same thing with TWLO, right? It gapped up on earnings, 4 days, down days. And that's because the market has been coming down. So this is more of, it is right at the mid Bollinger Band. If it gets below the 63.50, right, below today's low over here, if it gets below that, then it can come and test to this 57, 58, right? Again, the 60 area it can test. So I would be jeopardizing the entire width of the credit spread that I have. I do not want to do that. So if we cannot pop today on this, I would be getting out of this. So that's TWLO. Now let's look at SPX. It is rallying. I have a 3980, 3960, 3940, right? We are seeing some ticks pop up. So if I look at it over here, so if you look at it over here, the volume is lower, right? How do I hide this? Okay, let's look at this. So the ticks have been negative all day, right? Now we just got this last 5 minutes, we got it last 10, 15 minutes, we are seeing some buying into positive ticks. But look at this, right? We've had, this is today. Yesterday was the day we were selling off. Today we are toggling between, we started with day before above zero, back below, above zero, back here. So, that's where we are. Everything seems, there is a little bit of buying, but not much. Still not enough. So, I'm just looking at it. If we get back above, right? Here, right? Where is this? Here. So this is the SPX chart. We are right at, this is my 55-day moving average. This is the trend line. This is the support, weekly support. All that stuff is there. But this is the, if I take, this is the January 3rd, right? From the first day of the trading. So for 2023, from low to high, if I do, this is 39.47, 39.48, right? So 39.47.55 is the 61.8 retracement. And that is the reason I have the 39.80, 39.60, 39.40 for tomorrow. I don't know how we don't, flush here and then come up tomorrow or day after next week. So this is what I am been thinking, what happens. Okay, we have been coming down here. So come here, test it up from the underside. This is the thing. Test it from the underside, come back down. And so this is where I'm thinking by March mid, before options expiration, I'm thinking we get back to this 3900 to 38. This is 3880. 3880. Okay, so that's where I'm thinking we do something like that. Let's, so this is, if you look at it, yeah, come here, come back down, come back up, and then come down. And then set up for a big reversal to 4090 to 4100. Okay, so I still see us going back to 4100 and then pull back down, but I don't see this 4100 now until options expiration or the week after options expiration. And this is, I'm talking about March options expiration. So I'm thinking till March. So till March options expiration, we go down. Of course, it's not going to be in a straight line, but I don't think we get below this 38.75 or so area, right? This is where I don't think. Now, the reason why I'm thinking that we don't go below this 38.75. Now, this is, if you look at it over here, this was a nice consolidation. It was for how many days, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So it was like almost 2 weeks of consolidation over here. And then we broke out, came back to test, and this is where you're talking about, this is which day, right? So we broke out over here for the year. So this is the first week, right? First, this is 1-3, first day of trading. It's still in the volatility box, still consolidating, came back, then came back to test this, and then. So as this 1-6, the kind of buying we saw, I don't think we take that out. Okay, so for me, I am going to, let's say, this is my line in the sand. Okay, I am going to do a fib over here. So this is the 50%, okay, for that, which is around 38.58, correct? So as long as we are above 38.50 on the SPX, okay, I don't think we take this out. This is where I am drawing my line, okay? I am still looking for selling some puts in some stocks that have already been beaten up, selling some call spreads for stocks that have run up too much, because I think we are going to be in this 3,800 to 4,200 chop zone. In the meantime, we'll have something fall apart, something gap up. Okay, so I'm going to be mostly trading stocks, but this is where things change. Anything below this, something is wrong. So why not use this, right? It may come down till here, gap up, go back down, check this up, come back down. It can do whatever it wants. Then it can come here, check to this, and then come back down again. This is what I'm expecting all through the first half at least. So I'm looking to sell anything. I'm waiting for a flush to this 3,900. If I get this for this week or the next week, right, I'm going to be selling 3,800 put spread on SPX for April. Something like that. I'm going to be doing those things. I'm not doing the 0 DT ones. I'm not getting enough credit like last year. I am not also, the realized move. The volatility is like, okay, so let's see. This is how many days? Okay, so we had almost 90 points range for this day, right? And again, over here, the day after, 1 day left, again, 87 points range. Again, you're looking, this is only 60. So we've been, look at this, we had 112 point range. Okay, this is in January. when we have not had volatility go above. This is recently for this last week, we've had volatility come to this 22 area. But other than that, in the month of January and the first week of February, our volatility was at around 18. Okay. With 18, we were having moves like what we were having last year. Okay. Look here. If I have to look here, right, in one day, we had 145. So look here, this was 111. 145 point at that time we were having almost 25 to 28 wicks, right? Our volatility was 25 to 28 wicks. Right now we are having 10, 15, 30 points lower, and the volatility was 18. So I'm not getting the same credit like last year to be able to do those. I've had some losses, so I am changing and adjusting. So I'll be selling. I want another flush here, maybe a day or two more, to be able to sell over here. I'll sell a put spread here. And then when we pop up to this 4,100, okay, sell probably something here. So that's going to be the kind of cash flow trades that I'm looking at. So, that is what I'm going to look at for SPX. Now BNTX, I did that trade. It has not worked. Actually, it has broken down. So the problem is it's so illiquid. I'm not able to get out of it, right? This was so much of consolidation. It went higher and then totally broke down. So this was a rounded bottom that was breaking out. That's when I bought the trade, right? This is the day when I bought. After that, we've had 5 down days, which has broken down the whole thing. Now, of course, these four days, the market was going down. Now, because of Moderna, it has gone down. It is outside the Bollinger Band, so it can get back and check back to this, trend line. But right now, I don't see why it would not try and test this now. So I am, it's illiquid. It's July. I'm not able to get out for this trade. So what I'm going to do is I'm going to wait for this to come out. If I can get out for some small loss, it's so illiquid, and that also BNTX is not traded much. It's illiquid, and I've done a July one. So maybe, this rounded bottom, I should have not taken this trade when it was so illiquid, but whatever. So if I'm not able to get out of this, once it comes to this, that's when I'm going to buy again. And maybe I will buy Jan Leap for 2024. Something like that I would do. But I'm just trying to get out of it. I'm waiting for a pop that I can get out of. Now, finally, I have AR. The reason why I have AR, I sold puts in January because it's a nat gas play, and I did it. I think yesterday I did that. So nat gas ultimately, right? It gapped down on earnings, kept going. This was something that when natural gas was running, this was also running. So that's the reason I've sold puts. Now, why did I sell puts in this? So we came right to this, right? This is the long-term 100-week average, okay? And after so much of falling, nat gas yesterday had a first update. So it can keep falling. It can come to this 21 something, but I've sold a 27 put, right? And I got how much, right? No, this is not here. Okay. So I sold 27 puts. I got $5.40 credit, which means my cost basis is going to be less than $22. Okay. So less than $22 is going to be here, right? Exactly at the target. So if I get put the stock here, I'm fine. And that's the reason I sold 27. But because natural gas started popping yesterday, so this week we are having some pop in it. if it pops little bit also to this 27 or 28 area, I should be able to get out for at least 25 to 30% profit, or else I can keep waiting for it to. The reason why it will take so much time is because I have a Jan, right? I sold Jan. The way natural gas had been falling, it felt as though there's no end. So I did not want to sell a closer dated in April or May. So I gave myself some time. And so that's what I did. I don't mind owning the stock. And so I did that. Now the moment I get a pop and I can get 20 to 30%, I'll get out, release the margin, do something else with it. I think that's all. Nvidia, right? It gapped up, that has held up even after Nvidia gapping up so much and holding on to it. We are weak, right? We fell. So the reason why that is happening, if you look at it, for all this time, we had industrials holding on. So you're looking at Caterpillar, Deere, right? Caterpillar and Deere, they were holding on the SPX, whereas the tech was selling off, right? The first few days. Now Caterpillar, Deere, right? They have given up. And so even though Nvidia gapped up and holding up, we are seeing the SPX come down. Okay, so I think I am looking at more of the industrials to short. Maybe that is what we have in these next few days, that next couple of weeks, that I'm expecting some kind of rotation. If we don't have rotation, I'm expecting these to fall. Okay, this is Crane Holdings. I have put an alert. If we get below 117, I am going to be shorting this. So Deere, Cat, Crane, all these trades. So more into industrials. I'm thinking it rotates out, but tech has already run up so much. So we are not going to, we may hold on to them. We may not fall apart, because so many have already fallen, right? You're talking about February 2021 was the top in those growth SPAC names. So it's been 2 full years now. So either they have been forgotten and dead, or some of them may have some kind of bounces. So that's why I'm focusing on the stocks that gapped up this earning season. Any of them that gapped up on these earning seasons, maybe there's some life in it and they can try to bounce. It's been 2 years. So I am definitely looking at those growth names like TWLO and Shopify to sell puts in. Okay, that's what I am doing. That's all. Let's look at Bookmap for some time. The reason why I'm still, right? Apple has so much liquidity at 147. So I'm just like, okay, if it keeps selling off, Apple gets to this 147, which means we get to this, okay, to this 39.74, 39.69. If we get to this 39.69 today, whatever the price of my SPX put butterfly, I won't not hold it till tomorrow. I will get out of it. But that's what. Right now, we are toggling between this 39.80 to 39.86, going back to this 39.75. But I just need this small flush here to be able to get out. And that happens only if Apple gets to this 147. So that's what, and let's look at what Microsoft is doing in Bookmap. So look at it. I mean, Nvidia gapped up 10, 12%. Microsoft is barely down, 12 cents down. So this has to, okay, finally, we are seeing some selling come on in Microsoft. But again, same thing, right? It has 251. It needs to break these two for us to have a flush. If Microsoft holds this 251, Apple holds the 147, and we hold, and Nvidia is still at around this 232, 233 level. then we are not going to go to this 39.69. That's what it is. So we need these to break first. So that's what I'm doing. And right now, less is more. It's choppy. So I don't want to just get chopped up. It's all premium, just getting decayed. I am just playing small trades and seeing where it goes. That's all for today.